Devarsh, we are live now.
Okay. Thank you, Omkar. Good morning, everybody. Welcome to this Fortnightly Market Outlook webinar. This is the webinar where we present to you the developments across the international markets, what sectors are performing, and then based on technical and derivative data, we try to provide you insights which will help you navigate markets over the next fortnight. So, without further ado, let me invite my colleague. Today we are joined by Vinay and Ajit. Vinay will share his views from charts and Ajit from derivative data. So over to you, Vinay.
Yeah, thank you, Devarsh, and good morning all, and welcome to this webinar. We are going to discuss about technicals, derivatives, and some fundamental events for in this webinar, and we'll try to conclude what we are expecting markets to perform in the next coming fortnight. So, without much ado, let us start our technical observations and chart. What charts are saying about the markets. So first of all, I would like to share the performance of the world market in last fortnight and monthly. So 1 minute. Yeah. So this is a fortnightly performance of global market. So Dow Jones has risen by 2% and S&P 4%, Nasdaq 4%. So Nasdaq and S&P 500 have outperformed the Dow Jones in last fortnight, and the European markets have also performed in sync with US market. We have seen a big correction in the indices like Hong Kong and China. They have fallen by 6%. And if we would go by the monthly performance, monthly Dow Jones have fallen by 6%, S&P 6%, and Hang Seng has fallen as low as 14%. So there has been a monthly fall in the global markets. But if we were to consider the domestic market performance, domestic markets have actually performed well. If I were to look at the fortnightly performance, Sensex has risen by 4% in sync with US market, or we can say S&P 500. Midcap has 4% and Nifty is also 4%. But if I compare the monthly performance of Indian market as compared to the global markets, they have outperformed the global markets in a big way. So as we can see over here, Dow Jones was down by 6%, while Sensex and Nifty are down up by 4.5%. So gross outperformance we can see from a domestic market and on the monthly basis. Hang Seng fell by almost 14%, while here in mid cap and small cap in the Indian markets, they have gone up by more than 6%. So significant outperformance registered by the Indian markets as compared to the global markets if we go by the monthly data. So it is a good sign because recently we have seen that there has been positive developments economically as well as some underlyings which are actually becoming the tailwind for the Indian markets. They have been supporting factor for the equities here in domestic markets. So let us also understand how sectors have behaved. So this is the fortnightly performance on the left hand side. So consumer durable index has gone up by more than 7% in the last fortnight, and IT has underperformed with a slightly negative returns. It has fallen by 0.4%. So we all know that the IT is highly exposed to the US market, and whatever happened in the recent past and whatever announcement by the US government, it has directly impacted the IT, and IT has fallen that way. So last 15 days return is 0.40. And consumer durable, the domestic theme performed very well. Oil and gas sector has gone up by 6%. FMCG, again domestic consumption factor has worked out, and we have seen a more than 5% rise in the FMCG. Going by the monthly Bankex, the bank index has gone up by 10%. So the bank index is leading from the front. So 10% rise in a month is a big rise. And as we all know that bank index on the last session was almost at the all-time high. So that is a very good sign that financial, which is having a very good weight in the Nifty, is performing very well and taking charge right now. So it is a good sign. Apart from that, PSU segment did very well. It went up by 9%. FMCG went up by 8%. And IT was the underperformer where we saw a fall of more than 8% in a month. So metal index has also been underperforming because of the global volatility and the as we are connected with the entire global world, and there was a huge volatility last month. Now metal index underperformed along with the IT. So metal and IT were the underperformers, while Bankex, PSU, and FMCG were the major gainers from the sector side. Now let us also discuss the technical development. So now see in last seven trading session. This is a Nifty daily chart, and this was the low which was hit on the 7th April, and that was a low of 21,743. And from that level, after a big gap down of 1100 points in Nifty, it found bottom there in the morning itself and started recovering. And so from the low of 21,743 in last seven trading session, Nifty has gone up by more than 2,000 points. So there is a steep rise in the Nifty, and Nifty has been able to cross the previous swing high. The previous swing high was 23870. That was taken out in the last session in the intraday, and it closed above this closing basis. It closed above the previous swing high. It is a very good sign. Nifty has now reclaimed its level above all key moving averages. So I'm talking about 20, 50, 100, and 200 days exponential moving average. So previously it was well below this all long-term moving averages. Now Nifty is placed above all important moving averages, which indicates that there is a bullish trend on all time frame, whether it is a short term, medium term, or long term. Nifty has turned out to be a very strong performer as compared to the global markets, and it is looking very strong on the charts from here as well. Now, before that, I would also like to share our the last week's view. So we came out with a weekly technical report last week, and in that report, we anticipated that this the previous swing high of 23,870 will be taken out. We shared our bullish view last week. There was only three trading session in this last week, and in three trading session, we have seen a rise of 4.5%. So we anticipated a bullish trend in the market, and that we also shared our target at 23870. That was achieved. Nifty has bounced back by more than 4.5%, and we also anticipated Bank Nifty to outperform because of the strong technical setup. And Bank Nifty also vindicated our bullish view, and it has reached to the new all-time high. And the other observation has been that this is a Nifty weekly chart, and this is a closing basis chart. So this we can say Nifty weekly line chart. On weekly line chart, we can see there has been a formation of inverted bullish head and shoulder pattern. This is a typical reversal pattern. And after a 17% fall in the Nifty from the all-time high, this type of formation we can see on the chart. So this is a higher bottom which is formed on the weekly chart, and after higher bottom is followed by the breakout from the neckline from the inverted head and shoulder. So this breakout suggests that there is a medium to positional uptrend breakout on the charts, and this can further rise from here. Though the target is very big from here for the Bank Nifty, Nifty, but we are not right now taking this into consideration. It is a positional medium term chart, and we should not take target which is derived from this pattern. But yes, obviously, this is a very good pattern for the medium to long term. And here also there has been a bullish crossover. We can see on the weekly line chart, there has been fresh positive crossover by the MSCI and RSI. Weekly RSI has also reached above 50, which is a good sign for the weekly positional trend of the Nifty. Now, what should be the target for the Nifty immediately? So if I were to take the entire swing, which was seen from the all-time high was hit in the September 2024, where we saw a 26,277 was the high. And the recent low, after 17% correction, recent low was at 21,743. The entire 17% fall, if we were to take the retracement, the first retracement, 50%, we can say, Nifty has retraced already 38%. Now the next retracement is at 24,010. And after that, the important crucial uh, resistance derived from the 61.8%. So first resistance comes at 24,000 odd level. After that, we can expect Nifty to extend its rally towards 24,545, which happens to be the 61.8% retracement. So these are the important levels to watch out for. As far as support is concerned, Nifty has seen a steep rise in last seven trading session. That is why supports are also far. So if I were to consider yesterday the last trading session's low or Thursday's low, that was around 23,300. So this should be kept as a stop loss, and unless this is breached, one should take a bullish view only, and intraday dips and intra-week dips should be bought into. So overall, this 23,300 is a very strong support. SGX Gift Nifty is suggesting 100 points higher opening for the markets right now. So we are most likely to open about 24,000. So above 24,000, there is a resistance at 24,545. But before that, there is an immediate resistance around this swing high. This is a weekly swing high, which is placed at 24,200. So 24,000, 24,200, and last positional resistance we can see at 24,545, and support is at 23,300 for the Nifty. Now, Bank Nifty, as I shared, that Bank Nifty has outperformed. In last week, it was up by 6.5% in three trading sessions, and it missed the all-time high just by a whisker, only 50 points away from its all-time high. This is a big achievement by the big benchmark index. This is having a very good weight in the Nifty as well. So this is a very good sign that the financials as a sectors are outperforming and taking lead and now reaching their all-time high. So it is a very strong setup for the market, and good sentiments have been seen in the financials in last couple of weeks. Talking about the resistances, the retracement theory suggests that the Bank Nifty is headed for the next target of 56,000, which happens to be the 123.6% retracement of the entire fall, which we saw previously. And the support, the Thursday's low was placed around 53,000, 53,100. So this should be utilized as a stop loss in long position. So this is a very strong support as far as Bank Nifty is concerned, and 56,000 should be the positional fortnightly or monthly target for the Bank Nifty on the upside. So trend is clearly up, and we should not go against the trend. This is the Nifty chart, Financial Nifty Index. This has actually outperformed the Bank Nifty as well because of the good weight of the Bajaj Finance and Bajaj Finserv in this index. This index has actually outperformed the Bank Nifty as well. So this actually hit an all-time high, continuously making new highs in last week. This is a fresh breakout. This is at all-time high breakout, and this is looking still strong on the charts positionally. So Fin Nifty is the first benchmark index, which hit an all-time high, and now Bank Nifty is following that, and that we need to see. So there is a strong setup of the financials, Fin Nifty and Bank Nifty on the chart. Now, talking about the broader market index, this is nothing but the NSE 500 weekly line chart. So broader markets have not participated that much in last week, though they have recovered almost 4.5% rise was there from the lower level in last fortnight. But they have not risen in sync with the large cap indices. Large cap indices are actually rising on the back of short covering by the FIIs, and that is why they are actually taking lead. But overall, if I go for this chart setup, then definitely there has been a breakout on the line chart, and there is also a development of inverted head and shoulder pattern. So yes, in the next week we can expect broader markets to also catch up the rally, and they will also start doing well in the coming days. So no doubt traders have not minted money in this mid cap small cap segment in last week. There was a strong setup in technical on the large cap side, but now we can expect broader markets to also perform in the coming week. This is a small cap and mid cap, so a small cap and micro cap index. So as I said, last weekly report, there was a indication this bullish Morobozu pattern was there on the candlestick chart. This is a weekly chart of small cap. This is a weekly chart of micro cap. So in the last technical weekly report, we clearly indicated that this is a clear-cut bullish sign for the markets, for the broader markets. And as a result, we have seen that 4.6% gain in the small cap, and there has been a rise of 4.9% in the micro cap index. So this was clearly indicated in last week's report, and our view is getting indicated in that way. So still it carries the bullish implication, and we can expect them to extend the rally from here as well. This is another breadth analysis of the broader market. So this is nothing but the percentage of stocks above the 200 days moving average. We have taken a universe of NSE 500, and as we can see, this number has reached to 31. That means 31% of the NSE 500 stocks are now above the 200 days moving average. Previously, this number went down as low as 9%, which was seen in the previous bear market. So in 2020, we saw that number reaching around 6, and 2008, we saw this number reaching around 2 or 3. So similar kind of setup was there in the month of beginning of the March, and that was an oversold condition. We have been continuously telling and sharing our view that this is the oversold indication, and anytime soon we can expect mean reversion, and that is what happened in the last 2 weeks. It has bounced back, and now the number from the 9, this percentage has moved to 31. And in the previous history, whenever it bounces back from this oversold level, it at least go to 50 or 60 odd level. So from 30%, we can expect this breadth to improve further to the level of 50 to 55% at least. This concludes that we can expect the improvement in the breadth. No doubt we have seen a recovery in the broader market, but in coming days or weeks, we can further expect this breadth to improve, and this percentage of stocks above 200 DMA can reach to as high as 50 and 60 also, going by the historical analysis. This is one important underlying that we have been tracking for the Indian equity markets as well. This is nothing but the dollar index. So dollar index has corrected by more than 10% in recent past. That was a high of 110, and now dollar index is trading around 99. More than 10% correction in the dollar index. So it is a good sign for the Indian rupee, because rupee has started outperform doing well. It has been in appreciating in last fortnight, and falling dollar is also a good sign for the emerging equity market sentiments. So if dollar index falls, we can say that emerging markets can do well and Indian markets can do well. And this is also a positive sign for the metal sector. So if this dollar index continues to be at the lower level or correction level, then it will also help metal index to perform well in the coming time. Now, this is nothing but the MSCI India comparison of MSCI India versus MSCI emerging market. So we have taken the ratio chart of MSCI India divided by MSCI emerging market. So if I were to see this line, this has been a breakout. So if breakout is there and if this line is going up, that means Indian markets can outperform the emerging market. So this is a ratio analysis which indicates that emerging markets can do well, and out of the emerging markets, we can expect Indian markets to perform well. So this is a very good sign. Previously, we underperformed like anything in the calendar year starting, but now we can expect Indian markets to do well as compared to the emerging markets. Now, this is a comparison of India against the China. So this is also a ratio analysis which indicates that from the crucial support, MSCI India versus MSCI in China has taken support and bounced back. And this is a breakout in the ratio chart. This is a daily chart, and we have seen that trend line breakout. This means that India can outperform the China. This ratio is likely to improve from here. This is India divided by China. If it goes up, it is going to help the it indicates that India is doing better and there is a fresh breakout. So we can expect Indian markets to do well as compared to China from here. Last but not the least, it is the Brent crude chart. It is an important development. So in the previous week, not the last week, but in the previous week, we saw a long leg doji candlestick formation. So there was a downtrend in the Brent crude. So Brent crude actually in the month of January was placed around 82. So from the 82 level, it went down to 58 odd level. So there was a correction of 30% from the January high. It was a positive sign for the Indian economy because falling crude price is all positive for the importing countries like India. But that was a worry of recession because of the tariff wars and tariffs which were announced in the month of April. So that was discounted in the price, and that is why markets were expecting that there is a recession around there could be a recession around the world, which is going to reduce the demand of the crude oil, and that is why we saw a 30% correction. But the formation I can see on the weekly chart of Brent crude, this is a clear-cut bullish trend reversal sign. After a 30% rise, this kind of formation can be seen, which is indicating that Brent crude can reverse from here and can rise from here. So what we can take out of this development is the uh, bullish reversal in crude price indicates that the worries of recession in the world is receding. That means the we can world was worried about the overall geopolitical issues as well as the recession issues, but now it seems to be receding, and that is why this kind of development we can see in the crude, and we can expect crude prices to move higher. So rising crude prices are actually going to benefit the oil exploration companies in India. So we need to take it with those companies with a positive bias in the coming weeks. So let me conclude this session for technicals. So Nifty is now placed above all key moving averages, which indicates bullish trend on all-time frame. Bullish inverted head and shoulder pattern can be observed on the weekly line chart of Nifty, which is positionally bullish for the markets. Immediate resistance for the Nifty is seen near 24,200, followed by 24,540. Support for the Nifty is placed at 23,300. This level should be utilized as a stop loss in the long position. However, we can expect some running correction anytime because of the steep 2,000 points rise. So 23,600, 23,700, there could be correction up to that level, but dips should be utilized to go long. And ultimate stop loss for the long position should be at 23,300. Bank Nifty and Fin Nifty indices are leading from the front and placed very strong on the charts. Bank Nifty resistance is seen at 54,500, 54,500 is happens to be the previous all-time high. So this is first immediate resistance above which we can expect Bank Nifty to extend its rally towards 56,000. Support for the Bank Nifty is around 53,000 to 53,100. Expect broader markets to perform well too. So, however, they underperformed in the last week, but we can expect to perform in sync with the large cap indices in the coming days. Indian equity market expected to outperform the emerging equity market, especially the China. Crude seems to have bottomed out for the short term, which indicates the worries of recession is getting receded. Uh, it is a good sign. Rising crude could benefit Indian oil exploration companies. So the companies which are into oil exploration in India can be looked at with positive bias. Dollar index has fallen 10%, which is a good sign, which is a positive sign for emerging market equities and metal as a sector. So considering the evidences, we believe that Nifty is in a clear-cut uptrend. However, the recent steep rise of more than 2,000 points could lead to running correction. Support should be utilized to create longs. So immediate support for the Nifty seen at in the band of 23,500 to 23,600. If Nifty were to correct in case of any bad result announcement by the larger cap companies, then this could act as a strong support 23,500 to 23,600. Positional support for the Nifty is at 23,300, which can be utilized as a stop loss in long position. So this is our technical view for the next fortnight, and this is what I wanted to share with you guys. Now I would like to invite my colleague Ajit Nayak, who will share the market insight on the derivative perspective. Ajit, over to you.
Yes, thank you, Vinay, for the wonderful insight which you have given with the help of technicals. Just confirm that is my screen visible now?
Yes, it is visible and you're audible.
Yeah, thank you. So now let us look at the market from a derivative perspective. So when we combine technical and derivative, it gives us a good insight, more confidence to create and trade in the market. So that is what the ultimate aim is, that we should initiate some position and it should be profitable. So how, let us first understand how market behaved during the week. So we have seen short covering in the Nifty, where we have seen that Nifty has risen by 4.8% and open interest has gone down by 1.4%. And at the same time, we have seen long build-up in the Bank Nifty during the week, where we have seen Bank Nifty going up by 6.5% and open interest by 0.88%. This is also a reason why Bank Nifty has outperformed. People are more bullish in Bank Nifty when compared to Nifty, but in both the cases, the structure is very well placed. They are looking quite positive as of now. And this data gives us a lot more information. Put writers has been very active at 23,500 level and 23,400 level. And at the call side, we can see that 24,200 and 24,500 level where the call has been written. So this chart will help us to understand how sentiment of the call writers and put writers are there currently in the market. So here, if we look at the big bar, this is a bar of a put writer at 23,500 level. If we look at the entire chart, this is the highest open interest. So what does this suggest? This suggests that the put writers are more confident. Why they are more confident? They believe that market is less likely to move down. So only when they have such kind of conviction, they will create a good amount of put writing in the market. So this suggests that market, when because we have run up so much in recent parts, so we cannot rule out some kind of pullback. Even that comes into the market may not go below 23,500. This is what the open interest data is suggesting. And whenever the market is in a positive territory and it is in uptrend, support plays a very crucial role. That is what we have been saying continuously. Resistance are taken out very easily. Even if you look at during the last week, resistance were taken out very easily, but supports are held in a very appropriate manner. So this also gives us an indication that market is in a healthy uptrend because all supports are being respected. So 23,500 is a very good support for going entire week. So and it will be respected because huge amount of put writing has been also taken place. And resistances like we can see 24,200 and 24,500, where the big bar is there when compared to the call writing side. So here market might take some pause, or it can consolidate near that figure, 24,500. But as the market moves higher, we need to also look at what kind of open interest is built. Because the market is in uptrend, there could be a possibility that 24,500 call writing, they will unwind their position and they can shift their position. There is possibility, but that we have to look during the week. Now the smart money, the FIs. So what they have done, the FIs have covered their short. Short covering was seen in the index future segment. They bought around 2,908 crore, and open interest was gone down by 2019 contracts. So that is a good indication. And they have also created long buildup in the future segment. So that is the reason why that Vinay showed that many of the stocks is below 200-day moving average. Now there is a possibility that that number can go up because FIS is also creating a long buildup in the stock future segment. If you look at the chart, this chart clearly suggests that when market was going down, they were creating the short position, and now when market is moving upward, northward, they are covering their shorts. So their position in the market really gives us a good insight. So this is the chart where we can understand how their positions help in the market. So here, if we look at the chart, when market was going up, they were this is a net long chart position. Only long positions is been depicted here. So whenever the market was going up, their net long was there. They were 75 to 80%. They were creating long in the market. And when market was correcting, you can see here 17% only they had long position. That means more than 80% position they were holding their shorts. And now here typical double bottom structure has happened on the market. But you see when the market created a new low, they did not created a fresh short. So this is called divergence in their long positions. So means when market was making a low, they had no conviction that market will go down, and they instead created a long position. So this is a very good indication. So whenever such kind of phenomena happens in the market, that instead of market breaching the previous low and they are not creating a fresh shorts in the market, so this gives us indication that they are digesting all the negative news and market is ready to go upward, because they have more information than what we have. So they had good news or some information, so they did not created a short position in the system, and then we all have witnessed that market has rallied wonderfully. Now this is a very good chart. So market has creates some huge volume at certain levels, and that from this volume analysis we can understand that where market is going to take support or resistance. Here we can see that at this level near 22,500 and 22,800 level, there was a good volume, and market did not sustain well below this area. And here at 23,600, 800, where the volume chart is showing that there is a huge volume, and we have seen once and twice market reacted from those zones, and now we have closed well above that zone. That now this area will now 23,500 will act as a support, because there is a polarity change. There is a flip. It is also called as a flip zone now. Now where market can head? Market can head near this area where the next highest volume is there. It will act as a magnet. These areas will act as a magnet. Like 24,200 area, there is a little bit of volume, but when we compare the 24,500 area has a good volume. So market will now test this level. So this is also a very interesting chart. Now, if we combine all the inputs, what we have, what we want to say is, it is good to remain bullish with the stop loss of 23,300 level. Why? Because we have seen short covering in the market, put writing at 23,500 and 23,400 level. We have seen first sign of short covering by the FIs, and we know that they are still not that much long. They are only 17% long. Now just assume that when they become 50%, 60%, 70% long, where market can move, that kind of potential is there in the market. That is what we believe, because we have a lot of evidences to back up our conviction, and FIs have turned buyer in cash segment. On the higher side, 24,200 and 24,500 is going to be a significant resistance. Why? Because there is call writing, there is volume data, which suggests that there market can take a breather or market can take a pause. So our strategy would be, we have to be remain bullish. Dip, if it comes, we will take as a buying opportunity. 23,300 will be our stop loss for our strategy. And now when we come to Bank Nifty, here we are keeping a stop loss of 53,000 level. And we also have seen that PCR is put call ratio is also going up since 24th March. That is also a good sign. We have seen long build up in the Bank Nifty. So on the upside, we believe that 55,000 to 55,500 or 56,000, that is going to be remain as a strong resistance, because call writer is active there, and Vinay has also shown that Bank Nifty 56,000 level is going to play as a resistance. So we can remain bullish, use appropriate stop loss, appropriate risk management. Yes, thank you. Over to you, Devarsh.
Okay. Do you want to talk about sector-wise why?
Yes, sir. So this is a place where we can see the entire picture, where most of the major of the sectors have created a long build-up, be it automobile, banking, capital goods, pharma, new age companies, infrastructure. So this is a good time for the traders to take position. Yes, yes. Thank you.
Okay. Thank you. Thank you, Ajit. Thank you, Vinay. Both of them have provided the background for the discussion we had. So, strong rebound from the bottom, double bottom kind of a structure. And now we have passed the previous intermediate swing. We are headed towards 24,200. That's the first resistance, minor resistance, and ultimately towards 24,500. And 23,500 should be our stop loss. Mid cap and small cap, which have been lagging, should now start participating. So focus on MTF's call, focus on stock futures. That's where a lot of opportunity to make money over the next 15 days. We are at 9:36, so we have about 3 to 4 minutes to handle your questions. So if you have any questions, you can put it into the webinar chat, Q&A sections, and we'll try to answer as many as possible. So there are two sections, chat and webinar Q&A. I request everybody to put it into Q&A so that we can take it. Jit Sin is asking about one question on IT. So TCS, Infosys have come down and they are near good support as written there. Fundamentally also, this has been a weak quarter. The numbers are bad, but they are near the cyclical lows. We are expecting them to going to be a better quarter in future. They are value investment ideas, but we do not expect any momentum here. So for short term, for 15 days to 30 days, it may consolidate. For a long-term investors who want to invest and reap the benefit of their strong balance sheet, because these companies have a lot of cash on their balance sheet. And from time to time, as the cash accumulate, they do pass on using the dividend and the buyback route. So longer term, there is a opportunity that those who are value investors can look at these companies post the results. So over the next 1 week, the outcome of the results and the price will be discounted. After that, we can look at IT. Right now, we are not directly recommending IT for a shorter term. Gold has been bullish. Gold has surpassed its all-time high. And I am of the opinion, as we have mentioned in our weekly newsletter also, that money, which is about 65% of the global capital, is right now invested in US market. Another 35 is invested in across the world, Europe, Asia, and commodities. These three buckets, Europe, Asia in the emerging market, and commodities, should get a lot of capital from US markets now. And that's why these markets are likely to do well. India has bottomed out. Commodities have started bottoming out, and we expect metals and other commodities which are directly denominated in dollar, as dollar index moves down and trading 99, we should expect that commodity companies also should do well. Bank Nifty options calls we are giving regularly. Those customers who are watching us and are looking for our research ideas, our trading ideas, we have our branches through a relationship manager. You can get it on our both apps, Sky and InvestRight app. We have research sections. We have Telegram and other social media channels where our research is available. Mid-cap index is likely to outperform now. So smaller and mid-cap stocks are the area to focus over the next fortnight. Okay. There are some questions which is there in the Q&A also. Let me try to answer them. Markets have run up so much, so should we expect consolidation? There could be some consolidation, but we expect short covering to continue, and that means the market will keep moving higher towards 24,200 levels. Long-term investors can gradually start accumulating the IT stocks. Defense, we have been bullish. We have already given a couple of ideas as a pick of the week, like Musgao Dock and GRSC. On declines, you can accumulate them for the longer term. Defense as an area should do well. Gold Bees is one of the best ETFs for gold, and we have from time to time recommended Gold Bees. So if you are looking for a ETF within the gold, you can look at gold. Though gold has run up a lot, and we expect it to consolidate or correct for a next few percentages, next few weeks. So immediately we are not very bullish. The last momentum which takes an asset class to a level where it makes a euphoric peak, and then there could be some correction. That kind of movement has been witnessed in the gold. So we should not allocate fresh capital at this moment. We should look for pullbacks. For FIs, yes. So FIs, as Ajit pointed out, they have been short and they are still short. They are not net long and they have started covering their short position. But during the fall, they were short, but they have not been able to cover their short. Markets have actually run up before they could cover their short. So in fact, FIs are short in the market, and that is also a very good sign for short covering. We expect that the long-term investors in the FI section, there are about more than 2,000 FIs into the market. The traders are short. The FI which are long in the cash market, long only funds, they have started putting in money. Before these numbers turned positive, in the last weekly report and on our weekly newsletter on LinkedIn, Trading Talk, I have already mentioned that I expect in couple of sessions FI figure to start turning positive. It has happened as per our expectation. Few thousand crores of flows have started coming into the market, and this is going to last. We should expect huge amount of FI flows coming into the market over the next 1 week into large caps, into mid cap and small cap, and that should drive the markets higher. Expiry calls we are giving every week. There are on expiry days, we have been issuing recommendations. You can look at them. Vinay, you want to share your view about FMCG sector? Somebody is asking about FMCG as a sector. How is it doing?
Yeah, Devarsh. So FMCG sector has been doing quite well, and if I were to look at the long-term moving averages, it has surpassed that. Nifty FMCG index has reached above the 200 days moving average, which is a very good sign. And FMCG has least to do with the global uncertainty, as we saw that after the budget announcement, there was a demand in the consumption stocks, FMCG and consumer durable. So at that time, we did not saw any major move in the FMCG and consumer durable. But as it is a fundamentally positive for the sector, now when market sentiments are improving, these sectors have started performing well. And as I can see, there is a clear-cut resistance has been taken out and clear-cut uptrend. FMCG can continue to do well from here. So yes, it has least to do with the global uncertainties, and the domestic theme is there. And as we all know that whatever prediction from the sky and met department by the normal monsoon, this is also going to impact positively this sector. So yes, view is positive for the FMCG, and the large cap stocks in this space can continue to do well.
Okay. So market view we have already shared. To conclude now, we have been bullish on the market. At the end of the month, March end, we have said that the worst is over. We are headed higher. Due to tariff, we again made a kind of a double bottom on the candlestick. We broke the previous low. On the closing basis, we have respected. So more or less around 21,800, 22,000 level, we have found some kind of a durable bottom. And from there, we have rebounded about 2,000 points. And now we are just surpassed the previous highs, previous intermediate highs, and we are headed towards 24,200 and 24,500. We are expecting mid cap and small cap to now join the party. So, and in mid cap and small cap, there are, if you are if you want to trade, we give a lot of trading MTF ideas. We also provide you positional MTF ideas that are available for trading side. If you want to invest on mid cap and small cap, we have pick up the week product where we are issuing a lot of recommendations. So that's where you can look for next three months, 6 months, 9 months ideas. If you want to invest for a longer term, 2 year, 3 year, we have a lot of small case baskets on our website where you can look for long-term investment opportunities. So all kind of products, whether short-term trading, momentum trading, positional MTF or investment ideas are available with primary search. You can make use of all these information. Okay. We keep coming out individual stock, individual questions on positions on individual ideas. We won't be able to answer in a public forum. You can put those questions on our WhatsApp chat with the help of our relationship manager, and we'll be more than happy to answer your questions. It is 9:45. We have taken 45 minutes as scheduled. I hope you have been able to answer all your questions, and the information provided by Vinay and Vinay and Ajit from derivatives and Vinay from technicals. I hope it has been useful for you to form a derivative and technical trading strategy. Outlook remains bullish, and we hope to see that over the next fortnight, a lot of mid cap and small cap ideas should do well, and we'll hope to bring those ideas to you with the help of our derivative and technical teams. Thank you all for joining. Thank you, Ajit.
Thank you, sir.
Thank you, Vinay. Thank you for joining.
Thank you.
Thank you, and let's close this webinar.